Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. I want to talk to you today about MongoDB. MongoDB is a general purpose database platform. It's growing at rapid rates and I'm going to highlight some of that. I'm going to talk about its guidance for the next quarter, which is results are going to be reported in 2 weeks time. I'm going to talk also about one of the bearish considerations that I've seen people highlight, and I'm going to talk about its profitability profile. Finally, I'm going to bring this all together and talk about its valuation. So I'm going to just jump right in. So Q3 22, so remember their fiscal year and the calendar year is misaligned. So I'm going to talk about fiscal year. So Q3 2022 is about to report in 2 weeks time. Okay. So the guidance here, remember, for twice this year so far, MongoDB has raised its full year revenue growth rates, revenue guidance. So investors kind of hoping probably that to see that guidance raised again. So that, that's obviously something that the market really craves, is that kind of steady drop of good news coming in all the time. So just those kind of nudges up every so often. So this is a business for all intents and purposes growing at approximately 35% compounded annual growth rate. Okay, so I'm going to just unpick this slightly. Okay, so what MongoDB actually does is it allows developers to deconstruct and contextualize databases, data entry from, let's say, tweets or spreadsheets or databases, wherever it comes from, being able to contextualize and search that data for insights. Okay, so if you look at it, for example, and think about databases online that are always on, these are called relational databases, and the inputs are always being put in and taken out of certain of the database. So there's a lot of variables going in, and to be able to deconstruct and contextualize that is really, really important for developers. So with that in mind, the crown jewel here is MongoDB Atlas. MongoDB Atlas is the cloud platform. It's what they call database as a service solution, and it's growing at very rapid rates. By my estimates, over the next 12 months, this will make up more than 65% of its underlying business model. Okay, so at 2/3 of the business model and growing rapidly. Now, I have seen people make the case that the MongoDB Enterprise Advanced, this is the legacy business. It's kind of like that can be for people that either running their own clouds, or if you want to, for example, have a hybrid cloud or something like that. The legacy side of the business isn't growing that fast. So that side of the business only grew at 11% year over year. So the argument could be made that the Atlas side of the business is cannibalizing the legacy side of the business. So for all intents and purposes, we kind of come around to the full circle. The business is kind of growing at approximately 35%. It could pick up once the legacy business kind of becomes a smaller part of the business model, but that's still going to take another 12 months or so. Now, here's the thing. MongoDB doesn't really generate that much in terms of profitability. So even though I've highlighted in the red arrow here that the capex came down substantially, more than 50% from the same period a year ago, for Q2 2022, it reported negative 23 million compared to negative 15 million. So even though they're getting reasonably strong top line growth, that isn't translating into strong free cash flow. So with that in mind, and if you think about it, the guidance for this year as a whole is pointing towards negative 7% operating margins. These are non-GAAP operating margins, all the kind of pesky costs and stock-based compensation, everything that you can add back is being added back. So even in that case, the business isn't really that profitable. So it's like, yeah, okay, it's growing, but I mean, there are a lot of businesses that are growing. So the management tells us that they've got about 67 million shares outstanding going into Q3. And so I kind of just take this number for Q4. So the market cap for Q4 kind of is approximately 34 billion. So if we make the case that over the next year, MongoDB grows at somewhere between 30 to 35% compounded annual growth rate, that puts the stock trading at approximately 31 times forward sales. Now, if anyone's kind of invested in SaaS stocks, this is, not an eyebrow raiser, but it does kind of start to make you think, okay, if the business is only growing at approximately 35% and I'm paying 31 times forward sales, I'm like, yeah, I mean, there are plenty of businesses that are growing much faster than that, and you're paying the same multiple. For context, So Elastic is a peer, and I know that Elastic, a lot of people say, oh, Elastic isn't that up and coming anymore. Yeah, I understand that Elastic is growing at a slower rate, but you're only paying 14 times forward sales for that business. So it's practically half the multiple that you're paying for MongoDB. So that doesn't necessarily mean that Elastic is cheap and therefore Mongo is expensive. It's just a kind of like, yeah, you kind of get what you pay for. So it's just something for you to keep in mind. In this space overall, I mean, I understand, like MongoDB is really well set up for helping enterprises in their digital transformation. I get that, right? It's a fast-growing cloud platform, but ultimately, I think there are better investment opportunities elsewhere. So if you want to find out what those better investment opportunities are, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor, and you can check out what other people said in my platform, check out the reviews, start your due diligence there. Okay, thank you so much for listening. See you soon. Bye-bye.